Morning Fractal Effects team. We're still following the market from the morning session, so if you're joining us now, please make sure you read the disclosure in the footer section of fractaleffects.com. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we have no high-impact news drivers today, and yet tomorrow is FOMC meeting minutes, I believe. And then Powell speaks after, I think, the next day. We'll check the economic calendar. But yeah, no high-impact news drivers today. We have a double break to the downside on NAS. We have what's called a full divergence, a true divergence, sorry, where we have a double break to the upside for US 500 and a double break to the downside for NAS. Both of them had originally a mixed model buy, and both of them created a blue zone in real time. This one created a blue zone in real time, bounced off of it, and cut through. That means that there's more likely a chance that we're going to fall in suit with NAS. As soon as you create a blue zone and you cut through it, and then on the other one you have a blue zone and you're respecting it, usually this one turns out to be the real one, but you want to proceed with caution. We're still waiting for that 5-minute fair value gap to be created after double break retracement. So this is now our area of interest. We want to tap it and see if we create a 1M bearish fair value gap, and then off of that we'll try to look for a setup to go into this 4-hour. This is the next a lot of 4-hour lows. 4-hour low, 4-hour low, 4-hour fair value gap. That would be the inevitable target, but we're going to aim for the low-hanging fruit if we can get it from here to here. But first things first, you got to tap it. And right now we don't have any confirmation either, so we're waiting for that as well. And we got to stay calm. Follow the rules exactly. If this thing takes off without it, if it doesn't tap here and it just runs right into this 4-hour fair value gap, I'm okay with that. I want the perfect entry. I'm not chasing this market. I'm stalking it. There's a difference. Become a master of patience. Remember, there's a chance we're going to get a retracement back into our zone after we get a bearish confirmation on the spotlight anyways. There's an 85% chance that we'll get a retracement back into the zone and back to the 20 EMA. So this is the only fair value gap that's left. So just remain patient. But this is, again, a good sign. We closed over this. Two minutes, 57 seconds left. Just because I know where the market's going doesn't mean that I can catch it. The second I saw this double break and the second I saw this blue zone be violated, I knew that this thing was going to go down and take out these 4-hour lows. Doesn't mean that I can catch it. I got to catch it from up here. There's no 1 to 3 between here and here. If you jump in now, then it could start that retracement after the confirmation. So even if it takes this low out, it's fine. There's plenty of lows and a 4-hour fair value gap down here. And on US 500, same thing. I can't trade US 500 because it's given me a double break to the upside. There's only one other thing that could happen. If NAS continues down and hits this 4-hour and US 500 stays here, then suddenly US 500 then becomes the next high probability pair because it hasn't delivered its double break yet. One minute, 33 seconds left for this confirmation to stick. Once this confirmation sticks, you cannot buy NAS. But at the same time, if it doesn't come all the way back up here, I'm not looking to sell it either. There's your 4 hour. It could just dip into that and be done for the day, and then fall in suit with US 500. The fact that US 500 does not want to drop from here and has a double break to the upside, that's not a good sign. This is again called a true divergence. This is one of those scenarios where you don't want to trade. When all the confluence here is telling you up and all the confluence here is telling you down, that's true divergence. That means one of two things is going to happen. One of these has to hit a higher time frame PD array and fall in suit with the other. This one already did. It hit a 4 hour. But this was already a violated 4 hour. This one's close to hitting its 4 hour. That's what I mean. If we don't get an entry from up here to down here, and this just runs away and hits this 4 hour, it could just fall in suit with US 500, and they could both continue back up to take out this high for US 500. That's how divergence works. They have to both be speaking the same language. Even when they're not, they're trying to tell you something. That's the whole point. Remember, this is a rigged market. The only time you see this kind of divergence is when they pause one market so they can collect liquidity on the other. There's your bearish confirmation. Now I need a retracement back to the 20 EMA in this fair value gap, and I can look for a short all the way into this 4 hour fair value gap. If I don't get that, and it just keeps running and hits this 4 hour, that means they could both reverse and head back up. But this is all a good sign. The second you see a blue zone violated and one being respected, you want to trust this pair right now. But it has to give me the right entry, otherwise it doesn't matter. If you can become great at just divergence alone, understanding what this means, and how they work off of each other, you'd be a successful trader. Just off of divergence alone. Because even though this is a rigged system, it's hard for them to rig two assets. That's the whole point of divergence. We use US 500 and NAS, which are two markets that should be working together. But the second they diverge and one's telling you something else, you use that. It's almost like two friends and one's got a big mouth. You can figure out what they're up to. You just got to figure out which one's the one with the big mouth. That's why I said this is a game of psychology. This is not finance. So our next step is for NAS to come back into this fair value gap, this 5M fair value gap, tap that 20 EMA, and drop back into this 4 hour fair value gap. If it just keeps running into that 4 hour fair value gap, I'm not interested. That means that this has already been delivered. Looks like it is. Looks like it's going to continue to push. Because once we see that spotlight confirmation, there's an 85% chance that we're going to retrace back into our dealing range, and that's what we're waiting for. We're high probability traders. 85% chance that the market will retrace back up into here. The question is when? Will it do it first and then deliver, or will it deliver and then pull back up? If it delivers first, I'm not interested. Day trading is not everyday trading. It's only when you see the patterns and they look easy. Today is not an easy day. There's no high impact news driver on a FOMC week. We got Fed Chair Powell dropping some of the biggest news this week. I'd like for it to pull back up before hitting this purple zone, because this purple zone is going to be my TP. So I want to catch it from up here to down there, and that gives me a 1 to 3. But again, if it keeps running without us, then so be it. Looks like it's already tapping. But this is where I would have liked to have caught it, from there to there, with my stop loss obviously wherever the wick would have been from here. So let's say somewhere around there. That would have been a 1 to 4. 1 4.5 actually. Said it a million times. Just because I know where it's going doesn't mean that I can enter it. This was the foothold. This was the climb down. Otherwise, I would have had to jump. There's no 1 to 3 there. And you can risk the market retracing after you've entered here. Then you're already in a drawdown. Then where's your stop loss? You can't be in a drawdown the second you enter. So this is already delivered as far as I'm concerned. Sometimes it's as simple as that. Sometimes it could be that quick, like, okay, well, that was the move I was looking for. Now it's gone. I'm not going to sit here looking. You can. We have to because we're live for you guys. So we're going to show you something. But there's your double break now on US 500. That's another symbol and signal to avoid this market. When you get 2 double breaks in both directions, you want to just avoid it altogether. But this is clearly falling in suit with this now. But this is already delivered. So let's move over to oil. We got more than enough time, and we're going to show you more than enough things here. But NAS delivered without letting us in. Okay, so again, you got to be able to quickly look at this and tell what's happening. Hold on. I got a couple of different oil tickers. So what's happening here? We have, so London gave us 2 double breaks and then eventually followed in suit with the last one. We do not even have a break of the manipulation range yet, but we have a downside expansion model and a sell model. So ideally, and both of the DSDs have been violated, ideally I'd like to break this high with a manipulation move break up, and then a 5M bearish fair value gap down to take out this low into this daily fair value gap below. Right there. That's what I'd like to see. But again, it's not setting up anything right now. You do not even want to begin to trade unless the manipulation range is broken until you see at least a B. A B, which is a symbol for break, you want to see a break first. And this is going to behave similarly to the indices right now, just because, again, no big news. Anytime you're trading oil is a good asset to trade when you have high impact news drivers on the indices, because you want to avoid those. But oil is a good safe haven asset. Now, the only difference, though, is you still got to go back to the Forex factory and you got to check to see if there's any news on oil. 1 second. Today is Tuesday, August 19th. No news on oil today. So we're just looking for a break, but this is not telling me anything. I can't do anything with this. And if it breaks down here, it's already delivered. So that's why this is a game of patience. This is the only job that works like this. That's why I said psychology is the industry you're actually in. You're not in finance. You have to watch this patiently, waiting for the move. You got to stalk the market, not chase it. I can't do anything with oil until I get a break in either direction. I cannot trade US 500 because it gave us a double break, and NAS already delivered to where I wanted it to go. Ideally, this is one of those days, if we weren't live, I'd be done for the day. You got to be able to recognize these patterns immediately. We can take a look at one of, let's take a look at one of the Forex pairs really quickly. Let's take a look at GBP USD. Most likely, it's going to give me some kind of a similar setup. We got a downside expansion model from London to New York, but we have a upside expansion and a buy model that hit a DSD high. So again, quickly, You got to be able to look at this. The New York range has not been broken yet. This is all London. London gave us a double break, so I can't trade that. We have a buy model right into a DSD high. That's the daily standard deviation. Remember what that means? That means that this market usually goes that high and usually goes, there's your daily standard deviation low. It means it goes that high usually and that low usually, based off of math. So it's most likely already delivered to the upside. It created a 5M bearish fair value gap, which the market tapped and then dropped. So even though New York did not give us any entry, that was the only valid setup from London. And then London eventually gave a double break. So now New York, it would only make sense if New York came up and tapped the manipulation range and set up low, but we'll see. We have an alert set on this, so we can jump to another asset. Let's see if somebody or one of these other assets is already delivering. Let's take a look at an off pair. Let's go look at Aussie New Zealand. This is another good safe haven asset just because when high impact news drivers drop, this has nothing to do with it. This is the Australian dollar against the New Zealand dollar. So we had a double break to the upside. We have a double break to the downside, and there's your DSD low. Now I got to quickly take a look at the 4-hour and the daily too. You can't just blindly jump in. You want your higher time frame analysis to match your lower time frame analysis. But you can do it this quickly just because the spotlight indicator already paints out all the fair value gaps for you, so I don't even have to really look. From there, there's my daily. This is how quick you can switch over to an asset and understand what's happening. Let's jump down to the 4-hour. Where's my last 4-hour fair value gap? It's all the way up here. Is there any down here? No. The indicator paints it out for you. There's your 4-hour low. So remember, it's either inefficiencies you're filling in or taking out highs and lows. That's where your liquidity is. So it just took this low right here. Now when I drop down to the 5M, it makes a little bit more sense. You understand what the higher time frame is doing and is it matching up with the lower time frame. So most likely we're heading down to this DSD low. What happens after a double break? We get a retracement back to one of our key zones. So this is a tight range here. There's your double break here. I want to see at least a retracement back to the opening NYC fair value gap or the 20 EMA, perhaps even the blue zone that it never really quite touched. Oh no, that's London. Yeah, that's London lows and a blue zone right there, small one. I want to see it do one of those two things and give me a 5M bearish fair value gap. US 500 just gave us a bearish confirmation. So now all of this is bearish. But again, I cannot trade this. Anytime you get this much of muddied waters where you have two double breaks, there's no point. There's no point in trading something that's this convoluted. You want it to look easy. And I promise you it will. As complicated as people think it is to trade the markets, when the patterns look super easy, they're not trying to trick you. It's actually that easy. That's when you want to take it. Here, this is why it's called the market translator. If it's telling you right from the get-go, yo, this is muddy. You have a double break in both directions. The double break is supposed to be the dealer revealing their hand. So when you have a double break in both directions, the market usually likes to just go back and forth, collecting liquidity and heading back down to the new day opening gap, which is another thing that happens when there's no high impact news drivers. The market just sweeps liquidity and returns to what's called true value or fair value. True value and fair value is the new day opening gap, and it's the true day open, which is midnight open at New York midnight, right there. It's also marked out for you. True day open, and there's your new day opening gap, the aqua. So this is not going to really give me a great setup. And as we've checked, doesn't look like anything else really is either today, but let's see. Actually, I'll leave this on US 500. I'll move this one over to oil. Let's jump back to oil real quick. Now, when I'm looking at oil, I like to use Brent crude oil as my diverging pair. Now let's see what this is saying. So this is giving us a double break to the upside, and we have not even broken the range yet. So what does that mean? That means I'm actually looking for a break to the upside from US oil, because this one's already showed its hand. This is the dealer revealing the hand. So what happens after a double break? We retrace back to our blue zone, or if there's an NYC fair value gap in between, that's fine as well. And it sets up for a 5M bullish fair value gap to go long and take out this high. This is the only high it has to take out. Because anytime you have a sell model, that's what we have right here, you want to aim for the low-hanging fruit. The low-hanging fruit is usually the blue zone, but if you're above the blue zone and you're sitting inside of a new day opening, or sorry, new week opening gap right here, this big orange box, that's the new week opening gap. Again, it makes for muddied waters. All these levels are sitting tight together. So all this really has to do is take out this high for it to be delivered. So if it takes out this high, then I know that US oil also wants to take out this high and give me a break, and then most likely we'll look for a bearish fair value gap after that, because this is a sell model. So all I can do now is wait for crude Brent oil to give me a 5M bullish fair value gap, similar to what we were looking for in NAS. So it's got to give me a 5M bullish fair value gap, and it's got to do it from down here where I can actually take that trade all the way to the high, because this is as high as I want to take it. So for me to get my 1 to 3, I have to get a setup down here near the blue zone. Again, a patient waiting game. But right now, US oil seems to be the only setup. And we still have time. I want to quickly jump over to NAS one last time. For anybody joining us late, I'll give you a quick rundown of what happened and just also check what's happening now. So we had a double break to the downside. We had a downside expansion model. We created this blue zone in real time, tapped it, dropped. But this was the only place I could have entered. I was looking for a short in here, but the market dropped off without us and right into this 4-hour fair value gap. That was going to be my target. I wanted to take it from here to here. So it did not let us in, unfortunately. And then we have a bearish confirmation. Now we could get a retracement back to this zone, but I'm not interested in taking this because this was the low-hanging fruit target for the day. So that's why we're avoiding this market. Not to mention US 500 also gave us a double break in both directions, which is another reason you avoid this trade setup today. That's why we're looking at oil. That sucks because this was actually beautiful. All I needed was this candle to dip back here, tap this, and I could have taken that low, that sell-off right into the 4-hour fair value gap for a 1 to 4, I believe it was. That's what our position calculator showed us. But just because I know where the market's, the second I see this double break, I know what's happening. Second I see this double break and a blue zone being formed in real time and another blue zone on US 500 being violated, I know exactly what's happening. But just because I know what's happening does not mean I can always find an entry. That's where your patience comes in. That's where your rules come in. I promise you, if you stick to the rules, we don't have a single student that's in the red right now, by the way. Every single one of our students goes over the rules over and over every single day. They follow it to the T. That's why they're not in the red. It's an 85% accuracy with this strategy. And on top of that, if you go for a 1-to-3 risk to reward, the math works. You can't be in the red. Can't be in the red with a 1-to-3 risk to reward and an 85% accuracy level on a strategy. This is not a time lagging indicator. This is a market translator. It's translating what the market is doing. I'm going to jump back to oil real quick. This thing's going to continue to push down. That's fine. I don't care. It didn't give us our entry, and I'm not looking for a deeper entry off the next order block. That's not what I'm looking for. I only aim for the low-hanging fruit. That's what protects us. Still waiting for some kind of a bullish fair value gap from here. I'd actually like this to drop even further into this blue zone. That would give us a nice 1-to-3 right into this high. Just patiently waiting though. But this double break is a good sign. It means that the market, not to mention we've also bounced off the DSD low. Remember, this is the daily standard deviation low. This is as low as the market is comfortable going. This market specifically. It does calculations for each individual market separately for you. So it tapped it. Do you think this is a coincidence? This was already painted out long before it ever tapped it, about an hour before it tapped it. It knew where the low was. It wicked the consequence encroachment, which is the midpoint. It gave a 5M bullish fair value gap in which the market came back, tapped, and then it went all the way up here to break the manipulation range. So this is another great confluence that the market actually wants to push up because it's already tapped the low. Same thing with US oil here. This is not a coincidence. Look at the bodies of these candles. This was the one that broke the DSD low. This one quickly closed back into it. That's a great sign. I just need a good foothold to climb back up now. You can't climb a mountain without a foothold. You cannot take any trade setup without a fair value gap. Imagine that as your foothold. That's where your hand goes. That's where your foot goes. So I want this to retrace back to the blue zone and give me a bullish fair value gap to climb this back up. I can't trade this. This has not given me any break yet. I can only trade the diverging pair that has given me enough confluence. This has given me a double break to the upside. That's the dealer revealing their hand. I cannot sell this market. I can only buy it, and I can only do it when it gives me a good setup. And sadly, it looks like this might be the only valid setup today. The indices have already been voided. Forex is looking sloppy. Oil is the only one that seems to be giving us something, and even this is messy. Look at this. Look at all this back and forth. You can find a good trade setup here and there, but remember, we're breakout traders. We're looking for the market to push in one direction. This was great. Look at the Asia session for oil. We had a double break to the downside, a retracement up, and then it dropped from there to there. Here we had a double break and then a second double break. We immediately voided this market. We could not trade it. But eventually it followed in suit and it took out the lows of London. And now look at this. Look at this consolidation back and forth. And it's because the indices don't have any high impact news drivers today. So still waiting, but this is the only pair I'm interested in. Brent crude oil. If you're using a different diverging oil pair, that's fine too. But just make sure it's telling you that there's a double break. So this is the only one that's really revealed its hand. I'm looking for a trade setup to take out these highs and most likely into the daily standard deviation high or even London high. Remember, aim for the low-hanging fruit. So if I get my 1 to 3 for London high, I'm out. I don't need to go all the way up here. I'm not greedy. But I need the trade setup down here. Right now, look at all this consolidation. What happens when you see consolidation? Remember power of 3. Power of 3, consolidation, manipulation, distribution. But here's the other thing they don't tell you about the power of 3. When you see consolidation, it's usually going to continue in the direction that the market was going before the consolidation. So the market was moving up and then it started consolidating. So we could get a manipulation into the blue zone and then a distribution and head back in the same direction the market was going before the consolidation started. Consolidation usually leads to a continuation after a manipulation. We have all these relative equal highs up here. And remember, this is something we don't actually like to teach. I've said this before. When you see a double break in both directions, you want to avoid that market. But what our aggregate data has showed us is when you see a double break eventually, especially if the trade setup and you get a double break in the opposite direction on New York, this has already been taken out. So the second we got the double break, the New York session already took out this side and fulfilled that obligation to London. This obligation to London has not been filled, the double break to the upside. So that's another target that's going up here. That's another, point of confluence that lets us know that the market wants to run up here. But again, only with a decent entry. Now, how many candles do we have here consolidating? Usually you need 5. You want to see 5 5-minute candles to let you know that you're consolidating. We got 1, 2, 3, 4, 5, 6. We're on the 7th one. Now, where's that manipulation going to happen? I'd like it to be to the downside, right into our blue zone, and then give me a bullish fair value gap up. So let's wait. Here's the other thing they don't always tell you. Power of 3, there doesn't have to be a manipulation move. It could be consolidation straight to distribution too if they want. That's why you want the manipulation move to go in the opposite direction of your confluence. Right now, if all of our confluence is to the upside, I want that manipulation move to go down. What happens if it goes up? Guess what? It can continue to run all the way up here. I've said it before. The market can leave without you, and that's fine. You can't feel bad about it. All we can do is use the confluence that it gives us to make the best assessment and take the highest probability trade. We're not fortune tellers. We're high probability traders. You stick to those high probabilities and you will get a successful trade setup. Doesn't have to be every day. But if you want to make this your career, you got to be patient enough to wait for the right opportunity. Also, we don't watch this market all day long. Remember, if you're not in a high probability trade setup 1 hour after the range formation, you're done for the day. Go off to work, go hit the gym, do whatever it is you do. We don't sit here watching paint dry like most traders. We look at our signals, we get our confirmation, we wait for our trade setup, but if none of that comes, we're done. Who can say that? Who can say they work 1 hour a day? And we still have students that are making anywhere from 5 to 15% a month. Check our testimonials. Join us in our webinars. There's one this Thursday. So here we go. I'm going to mark this out just so you can see the power of 3 physically. If you're not familiar with the power of 3, I'm going to say it one more time. Consolidation, you want at least 5 candles in there consolidating. Just trying to create a box around here so you guys can see it. There's your consolidation. Now I'm waiting for a manipulation and I'd like it to be to the downside. Something that looks like that. That's the false move. And then I want to see distribution right to London highs. There's your power of 3. That's what I'd like to see. And my fair value gap should be setting up here, my bullish fair value gap. But if it takes off without us, nothing I can do about it. For anybody that tells you the markets are unpredictable, bullshit. We predict it every day. Join us. We're live Tuesday, Wednesdays, and Thursdays. Check out last week's stream from Tuesday, Wednesday, and Thursday. We had CPI and PPI, and we found a trade setup every single day, a successful one. We were successful every single day. Even though we weren't live on Monday and Friday, we were successful on Monday and Friday as well. We posted it on our TikTok. This is translating what the market is doing and what it's not doing too. So that's what I want to see out of crude Brent oil. And then this should fall in suit. Look at what's happening on US oil. Same thing. We had our consolidation, and now it looks like it's pushing down for a manipulation move back to our blue zone. Remember, these blue zones are highly algorithmic zones that the market is drawn to and pushes from. In the case of US oil, we've actually tapped both sides of the daily standard deviation. Sometimes this market translator surprises even me. Look at this. This is predicting that it was going to be a tight range today. And look at where the market bounced off of here. Here, 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 here. It's unable to break that zone, but it knew that it was going to be this zone right around 8:30. This zone was already drawn out for you, 8:30 Eastern Standard Time. So I cannot trade US oil because it has not broken, but still waiting for Brent crude oil to drop down here and give us some kind of a trade setup to take London highs. Let's see if it does it in time. Until then, I'm going to switch over to NAS real quick and take a peek. Looks like it's about to push down here, so we'll leave this up. But let's take a look at NAS. We only got about a little over 15 minutes left in our stream, so we're going to try and show you guys a little bit more here if we can. Let's get some more education in. Did we punch past that 4-hour fair value gap? We did, but now we're getting some anemic candles here, possibly setting up for another power of 3, might be consolidating here. Who knows? Or again, it could just keep running all the way down to this daily fair value gap. But never gave us our entry. It never came back here. That's disappointing. That would have been beautiful. 1 to 4. I think it was 1 to 4.5. But you can't feel bad about it. Do you have any idea what the probability of the market retracing back here was? First of all, we have a spotlight break here. Confirmation. That means there's an 85% chance that the market was going to retrace back into here. We have a double break here. Double break leads to a retracement back to our blue zone, which it did, and then it gives us a first presented fair value gap. That first presented fair value gap, there is a 80% chance that the market will come back and tap it. So 80 and 85% chance. There's two different strategies working here in confluence. What if I told you there was an 85% chance that you were going to win the lottery? Wouldn't you wait? So that's why that is the highest probability zone, and it did not get tapped. So I can't feel bad. This is where, like, just standing here alone, waiting for the market would have meant 85% chance that you would have won the lottery. And within my window of opportunity, by the way, it has to do it before 11:30 Eastern Standard Time. Otherwise, it's void. So, and the funny thing is the market will eventually retrace back into here later in the day around 1:30. But I'm not interested in buying this market. I can't buy this market. Because that's the other thing. It's only a buy model until it's not, and it's only a sell model until it's not. Meaning once it's delivered, it will eventually then switch and go from seeking liquidity to filling in inefficiency and vice versa. So right now in the higher time frame, we just filled in this inefficiency, this 4-hour fair value gap. So that means the next thing it's doing is looking for liquidity. But that could be in the form of a higher low on a daily down here. There are days where I feel like Nostradamus, where I feel like I know where the market's going to go, but it doesn't mean that I can enter. I'm not going to jump in half-ass. You want to know the truth? I knew where the market was going the second this inverse fair value gap was painted right here. That's why I painted it. This is the market going up for the retracement. So I used this inverse fair value gap, and the second the market dropped below it, tapped and rejected off of it, I knew it was going to drop, but I was waiting for all the rules because my rules are what protect me, and I was waiting for that fair value gap. Let's jump back over to oil and see if it's giving us anything other than just some consolidation. Right here, we did not get that manipulation move, but we might be getting a bullish fair value gap out of Brent crude oil finally. So that means it used the NYC fair value gap as its retracement point, which is fine. Now the question becomes, is it going to give us a trade setup, or is it going to do something similar to NAS where it takes off without us? Because first it's got to create a fair value gap. It hasn't created one yet. I'm just kind of speculating. Let's see what happens if it creates one there. Now if it creates one there, my stop loss has to be below, 2 ticks below here. I don't think that's going to give me a 1 to 3. With the target up, 1 to 3, okay. First we got to create this fair value gap, then we got to tap in. It's got to all happen within this zone for me to get a 1 to 3 all the way to the DSD high. So it's still patient waiting game, and still we have not yet seen anything happen yet. Nothing I can use. Excuse me. That's how this strategy differs, though, from every other strategy. We translate the algorithm that controls the market. This is not a time lagging indicator that's telling you what the market did. This is forecasting what the market is going to do next based off of all the aggregate information. We can't spoon feed this to you, but believe it or not, we're actually working on a version that can. The next one will tell you right in the right-hand corner here, buy, sell, or you cannot sell this market, and it'll give it to you in percentages. 80% chance that the market's going to go up, or 75% chance that the market's going to go down, and that's going to fluctuate depending on the confluence points. The next version is also going to paint out that zone for you, the one that I painted out on NAS, that high probability zone that the market was going to retrace to. It will paint that out for you. We're working on a lot of great things here that's going to make this so easy that you literally just have to wake up, rub your eyes, turn on the computer, and you'll see an entry point. You don't even have to do the higher time frame analysis. It'll do it for you. We're working on one of those. We're working on a separate indicator that's going to be part of this package that will show you where the 4-hour and the daily fair value gaps are. And in the right-hand corner, it'll let you know if you're in one. Beyond that, there's nothing else we can do other than burp you and put you to bed. You know what I mean? Still a whole bunch of nothing, guys. And again, it's because there's no high impact news drivers today. And we got FOMC later this week. Fed Chair Powell is going to drop some massive news. People think there might be a rate cut forced by the Trump presidency because he didn't want to do it. Economists said that you shouldn't do it. So let's see if he was forced to do it or if he's going to stick to his own guns and not. Either way, it's going to be big news, and either way, it's going to equate to one hell of a big spike later this week. I believe it's on Friday. Let's take a quick look. Remember, Forex Factory is your friend, guys. This is where you should check every single morning. So tomorrow, Wednesday, FOMC meeting minutes. Thursday is flash manufacturing, and then on Friday is when Fed Chair Powell speaks. You don't want to be in the market on Friday. So this is, you better not be trading on Friday. You should not be trading Thursday. So Wednesday, you can trade oil, but just stay away from these time zones. Forexfactory.com. Use a different economic calendar if you like, but you should have a economic calendar bookmarked on your browser. You should look at it every morning or look at it at the beginning of the week if you got a great memory. Still a whole bunch of nothing. It did not leave us with that 5M fair value gap like I was hoping, so it filled that in. That means the market could push down further. So in a way, it's a good sign. Either we're going to push down now into this zone, or it's going to take off without us. Either way, so we can catch it if it comes down here, and if it takes off without us, we can't. So who cares? We got 10 minutes left in our stream. That's our window of opportunity. And if we weren't live, as mentioned before, we would not be trading this market. The second the indices gave us a double break in both directions and I saw this consolidation, I knew that this was not going to be a market I wanted to trade. We only trade, by we I mean my team, we trade oil when the indices are too convoluted or if there's high impact news drivers. And we trade NAS and or US 500, whichever one is the better diverging pair. Those are the only ones that my team trades in the morning. I'll use US 30 as a confluence point. And I don't like trading gold. It moves too fast, especially for beginners. Stay away from gold unless you want to get your face ripped off. And Forex just isn't my jam. Not enough movement. I don't like the lot sizes. But that's how quickly we can assess a market. I knew literally within 15 minutes of when my computer opened that, oh, okay, this is not going to be a good day. But that's how quick it is. Imagine you could tell that about the rest of your day. If you could wake up every morning and tell with a high probability if it was going to be a good day or a bad day. If you knew it was going to be a bad day, you'd just stay in bed. And if you knew it was going to be a good day, you'd make sure you clean up, get a haircut, look good. That's what this market translator does. It lets you know if it's going to be a good day or a bad day. And lucky for you, your day is only 1 hour long. So quick in and out on those good days. But watch our stream last week. Check our YouTube channel. Watch last week, Tuesday, Wednesday, and Thursday. We called it like we were Nostradamus. We had multiple trades, actually. We caught it on the way up. We caught it on the way down. Because the information was there. So this is the first day since last week where not too much has happened. And even then, we still called the direction of the market. It just didn't give us an entry into NAS. So those are the three things. Higher time frame analysis, lower time frame analysis, make sure they match. And then finally, waiting, not chasing, but waiting and stalking for an entry. Those are the only three things you need to do. We teach you how to do all three. Once you mastered it, and you mastered patience, you got this. Our youngest student right now, who I believe is 17, is making anywhere from 10 to 15% a month. Just because the strategy is easy, not because she's some kind of whiz. Anybody can learn this. You can learn this in 5 to 7 days. Practice for 30 days in a demo account. Join us for our live streams until you've mastered it, and you're on your own. You can trade any market. This strategy works across everything. You can trade crypto. You can trade Ethereum and or Bitcoin on a Saturday morning if you want. Same strategy. So still a whole bunch of nothing. 7 minutes left in our stream. I don't think we're going to get that bullish fair value gap entry in time, I should say. But I'm going to leave you guys with some homework. Come back and see if this power of 3 gave us that manipulation move and a 5M bullish fair value gap, or if it just took off without us and took out London highs right into the DST high. Both ways, I'm predicting bullish, but that's the only one I would have been comfortable with. But that's what the market translator is predicting right now, that this wants to, at the very least, take out London highs, which are all the way up here, and most likely into DST high, but only with the right foothold entry, 5M bullish fair value gap. That's what we're waiting for. So 6 minutes left. Let's see. Still patiently wait. We got one more candle left here, one more 5M candle to print, and then we'll call it after that. Please check us out on fractaleffects.com, where we teach high probability trading. The link is in the description of our YouTube page. Check us out on all the social medias, fractal.effects. That's where we post our trades, our trade setups, even on days where we're not live. You might see one on a Monday, Friday, or a Saturday, because our team does trade. And then we're working on doing more live streams for free on YouTube. If you learned anything, please hit the subscribe button, turn on your notifications so you know when we're live. We're live Tuesday, Wednesdays, and Thursdays right now. And our goal, even if you don't sign up, our goal is to teach you as much as we can. Even if you go to our website, you can scroll down to the package section, and you can actually, there's a link there where you can get 15% off. So even if you don't sign up with us, you can get a link, a 15% discount off your next TradingView plan. Because you want to make sure you have a good platform where you watch the markets. TradingView is one of the biggest ones. Keep in mind, don't take our word for it. We entered the TradingView Leap contest. I believe it was at the beginning of the year, the one they held at the beginning of the year back in February. And we placed in the top 3 percentile. Our goal was not to win this, just because there's people that over leverage and try desperately to win that contest. But we were, out of 40,000 participants, we were in the top 3%, and we had gained 52% in the account over that 30 days, which I believe equated to 132,000. And that's on their website. You can check their leaderboard, and that was the one that was held back in February. We just wanted to enter it just to show you guys what this strategy is capable of. And that was not over trading, not over leveraging, 52%. Two minutes, 47 seconds left in this last candle, and we'll conclude our session there. Let's just wait and watch. If anybody has any questions, please drop it into the comment section there in the chat. We'll get around to it. We want to make sure you guys understand. Not even questions just about our strategy. If you have any questions where you don't fully understand certain concepts in the market, we can drop you a link. Here we're getting this pushed down. Here's another tidbit for free. If that zone did not get tapped like we were talking about in NAS, let's just quickly jump over there because I don't think this is going to push in the next 2 minutes. But NAS, that zone that did not get tapped, there's a high probability chance that it will eventually get tapped after 130, but that's past our window of opportunity. That's in the so if you're in the masterclass in the Learning Hub, that's the purple zone strategy. That's what that covers. Um, the purple zone strategy is kind of more for an emergency in case you ever things go south and you're wondering if the market will come back to certain zones. It teaches you what the market wants to do late in the later afternoon session. So there's a purple zone that's created. It's usually the first fair value gap of the purple zone that gets tapped and pushes back to this zone. Not always, but there's a strategy in there that where the market does like to retrace. That's why this is such a highly algorithmic zone. That's why we're waiting for it to be tapped within our window of opportunity. But just to show you how highly algorithmic it is, the market will come back and tap this at a later point, like most likely around 1:30 or after 1:30, I should say, Eastern Standard Time. But again, we want it when we want it, and we want it in the window of opportunity. So that's our time. Thanks for joining us. Again, we'll be live tomorrow, and we're going to find some probably a safe haven asset because we're going to be trying to avoid any US related assets tomorrow and going into the rest of this week. But we still want to make sure we give you guys the education you guys deserve. So we'll see you guys tomorrow. Have a good rest of the day. Take care.